Hey, good morning. Let's go over today's trade plan. So after yesterday's strong reversal, we were looking for some follow through and we got that in the overnight session. So at this point, heading into the open, we know that overall the buy side is more dominant, but at the same time, we are near some important resistance. So we just need to be mindful of that. And in order for the buyers to maintain control, we don't necessarily need to see the S&P continuing to make new highs at this point. The market could simply balance in the upper part of yesterday's range and the buyers could still maintain control. So given just the magnitude of the move that we've seen yesterday and the fact that the market is exhausted and overbought, we could continue to balance within a range today, but more than likely will balance at higher prices. Now, because we're dealing with such a big range, when I say balancing at higher prices, that could still be balancing above the 45.75 to 47.75 zone. So we're currently in a high momentum, high volume market. We know that we can expect a pretty decent range on the day time frame, or at least higher than average volatility within the day's range. So now the question is, where can that range be established? The buy side is overall in control, and in the overnight session we tested 80 half. We had resistance at 80 quarter and we got some selling off of that area. So on the way up, we still have resistance at 78 half to 80 half, and then after that we have the resistance at 83 to 85, but that marks the all-time high. So beyond 85, there is no hard resistance. So at that point, it's really just about range potential and where the market may be exhausting the range. But given that we are testing larger time frame resistance, this is the all-time high territory, I think that the sell side can still be active, and the way that this market has reversed and how bullish the market has been, the door is definitely open for the S&P to push to a new all-time high. The only question is whether that's going to happen today, and that's the risk point for buyers on the smaller time frames, is that even if the market is eventually going to make an all-time high, it doesn't necessarily have to happen today. So we just have to be mindful of that and then manage our expectations and our risk accordingly. On the downside, a break below 64 half to 66 half would be breaking majority of the overnight balance. And then below that, the first area of support would be at 57 to 59 and the overnight low at 55 quarter. Below that, we have the HVN at 52 half to 53, and then the next area of decent support is 45.75 to 47.75. Now, given that on the larger time frame the buyers are more dominant at this point, responsive buyers can be active at pretty much every zone on the way down. Now, in the event of a breakdown below 64 half, we have to gauge the momentum situation. We have to see the level of strength or weakness we're seeing at 57 to 59. That is right below the previous day's close. And if we are seeing excess weakness on the advanced decline line, or if the other markets are selling off and coming down on higher momentum, then you may need to time the long setup and make sure that you're entering after the market has at least exhausted the downside. And because a break below 64 half would be breaking below majority of the overnight balance. So at 57.59, we just have to determine whether it's still a good area to trade in real time. What does the real time situation look like? Is the AD line showing continued strength? Is there a lack of downside momentum? Then perhaps 57.59 could work. On the upside, in order to continue going higher and testing those upper areas of resistance, we are going to have to see continued upside momentum. And if we are not seeing upside momentum on the NYC tick, then it's going to make it more difficult for ES to continue climbing higher and testing these upper areas. And even if it does get up there, if there is not sufficient sustained upside momentum, then responsive sellers can step in at 78 half to 80 half, as well as 83 to 85. And then on the downside, let's say we do fail here and end up pulling back in a slightly bigger way, 45.75 to 47.75 is an important zone, and that is a high odds area for buyers to be active. Below that, we have 39.25 to 41.25, but just the break below 45.75 would tell us that, at least on the smaller time frames, the sellers are gaining a bit of dominance. Again, it does not change the bigger picture, because the range that we're working with right now is simply so large that even if we got a deeper pullback into 35 or even the 25.5 to 27.5, that larger time frame structure that has been built up over the last day now is not really going to be impacted. But ideally, if we are going to see continued dominance from the buy side, then ES holds above 45.75 to 47.75, and then if our immediate short-term bias is going to continue to be fairly bullish, then ES could hold above even 64.5 to 66.5. So we just have to see, how much strength are we really seeing in the market, and then trade accordingly. And then as we head higher, keep in mind that we are at larger time frame resistance, and it's going to take a lot of broad market strength and upside momentum to break through. But the door is open for the market to make a new all-time high, and it's just a matter of whether it's going to happen today or tomorrow or sometime next week. But the magnitude of the rejection and reversal from yesterday is certainly pointing to at least a test of 83.85. So we do have to be cautious even on the short side at this point. So those are the main ideas heading into the open. Let's see if overall the buy side can maintain control, and we'll take it from there.